I'm Corbett Wall with DV Auction, here with your cattle market summary for the week ending August the 12th, where we saw here late last week another example of how greed balances out agriculture. And I don't mean greed to be a bad word, it's just, it depends on greed, which is really just a producer's response to what the market conditions are doing out there. And your economic principles pretty much rely on greed, or at least a positive response when there's money there to be had. And it reminds me of the Latin phrase ceteris paribus that we saw when I was back in college studying all these economic principles and things. But it's a Latin phrase that means all other things remaining constant, and it really just ensures that people are going to act the way that they should act, depending on what your markets are like out there. And we saw that. We'll talk about here in just a little bit of this record crop that's going on out there and in the corn out there, and it really just that's just a result of the big market that we had a few years ago on corn, and breaking out a lot of ground. A lot of us hated to see them breaking new ground out that probably would have been farmed a long time ago if it really needed to be broke out. But now we've got basically overproduction of corn, and it's just that's the way things balance out right now. We also see it in the cattle too. Why do we have record high carcass weights? Why do we have these giant cattle again? It's not that that's what we really wanted to do. It's just that the feeder cattle were so high, it was easier just to keep putting pounds on these big cattle and making them heavier, because they were still getting paid for that. The packers had taken away all of the discounts for having those big heavy carcasses that they said they couldn't sell to get them through the supply hole there that they had. And now we've gotten back up there, and they're wanting to get these cattle back down a little bit, but the feeder cattle are still so high that most of your feedlots figure it's just simpler just to keep putting weight on those cattle that they've already got, rather than to try to buy some more. But you look at your cattle futures for this past week on your October live cattle contracts. Monday was down 87, Tuesday up 35, Wednesday was off just 7 cents, Thursday down 37, and Friday down 2 cents to end the week at 114.52 on the October, which was down exactly $1. You look at your August spot markets at 116.32, and still carrying a decent basis there compared to what the cash fat cattle market is. September feeder cattle, Monday was steady or unchanged, Tuesday up 165, Wednesday down 35 cents, Thursday off $1.52, and then Friday was up 57 cents to end the week at 147.55 on your September, which was up just 35 cents. Your August spot market on your feeder cattle was 149.07. You look at your CME feeder cattle index, it's at 147.95. Your real-time index on Cattle Market Central is just 6 cents away from your spot feeder market there at 149.01. We did end up finally trading some fat cattle there on Friday at a steady price at 119. But on the dress side, it was a little weak. It's probably going to be a negative indicator of what the markets are going to feel like starting out this week. Probably on your feeder cattle are going to be a little bit softer around, or at least have a lot of pressure on them going into your big sales on a Monday. But your dressed market ended at 187 for the most part. Started getting some late sales in. We'll see how much that is. We have really no feel at all for how much volume moved, but probably going to be significantly lighter than we've seen for the last several weeks. And that 187 would be steady to $2 lower. And your slaughter, they're still keeping this slaughter up, but it's starting to taper off a little bit. These packers really have not lost any money this calendar year at all. But they don't want to start that, and they're being very, very disciplined in their purchasing the cattle and slaughtering them and trying to take advantage of these black margins that they've got. But your slaughter backed off a little bit this past week, 581,000. That was just 4,000 lighter than the previous week, but 37,000 heavier than the same week a year ago. Box beef cutout values indeed have pretty much bottomed out. They seemed to a week or two ago, and we've got choice carcasses for the weekly average at $200 and 54 cents, which is the first time it's got back up to $200 after dropping below there over the last couple 3 weeks there for the first time this year. But it was up 183 for the week. Your select carcass values on the average weekly sale was 192.48, which was up 160. But you look at the big supply and demand crop report that came out late last week, and we see, like we talked, a record crop there. And you look at your yield estimates on corn, actual come in at a yield of 175.1 bushels to the acre. The trade estimate was almost 5 bushels less than that at 170.6. You look at your beans, the actual come in for the yield estimate on this year's crop at 48.9 bushels to the acre. Your trade estimate was 47.5. You look at production for the whole crop there, your corn is set at 15.153 billion bushels. That's the first time it's ever been over 15. But your estimate of the trade estimate was 14.757 billion bushels. And on your soybeans, the actual estimate from USDA come in at 4.06 billion bushels, and the trade estimate was 3.941. But and also had an increase in ending stocks for both crops, and that includes your old crop on corn and your new crop and your beans also. But it's emboldened our feeder cattle market. It should keep that pretty up. But all of our inputs have been pretty cheap on your feeder cattle. It's just that our out front fat cattle board is just not supporting the prices we're getting right now. And I'm not sure, as positive as so many fundamentals are on our beef, we're just not able to get these fat cattle out front months to get any higher, and we really need to see that to see it go up anymore. Cash feeder cattle around the nation this past week steady to $5 higher. Most of your gains were seen earlier in the week, moderated out in the middle of the week, and also in comparison to the big gains that were seen the prior week. But you look at the individual market there, Eastern Missouri Commission Company in Bowling Green, Missouri. The Angels family right there have been in the livestock marketing business for a long time. They were in Columbia, Missouri for years. They've taken over that Bowling Green market several years ago and really have it firing on all cylinders. And it's on the wrong side of Missouri if you're thinking about a lot of big cattle production, because it's right on the Illinois line. But they run that market like a Western sale, and then they get some big runs in there. They sold a load of steers at 1 o'clock in the afternoon on Friday, weighed 740 pounds at 157. That's a long ways from your commercial feedlots. But if you enjoy this market, not sure how you got to it, like DV Auction on Facebook. You can look at Cattle Market Summary on YouTube, or go to thestockexchangenews.com. So from a home office here in Canyon, Texas, we'll talk to you on Wednesday.